welcome to Somewhat Scholarly. My name is Alan Hibbard, and today I'm doing another reaction video. So you guys know that I'm a huge fan of Bitcoin, and one of the things I like to do is try to prove myself wrong. So I went to YouTube and I searched, why will Bitcoin fail? And the first video I got is the one I'm going to react to today. It's a video from Titus Tech, and I've never seen any of his videos before. I have no idea what his views are really on anything. But his video is about 15 minutes long, and I'm going to watch it and react to it today.
The rest of it, I just constantly dabble in, and I'm constantly trying out new projects because I'm really curious to see what that future cryptocurrency will be. But too many people put too much stock in Bitcoin. So let's take it down a peg or two and actually talk about the pros and cons of Bitcoin, because there's a lot about Bitcoin that is good, but so much that is missed and misrepresented. And this video is coming at it from a technical perspective, where I'm going to be touching on all the things that people talk about when it comes to Bitcoin. And I'm going to be debunking a lot of those actual opinions, because so much of it is just groupthink. It's this hype machine that goes around. Everyone says the same thing, and the rebuttals are typically terrible by the counter arguments. I need to correct this, because I think people are going to get hurt if they don't understand what they're actually putting their money into. We're going to start with the pros, what everyone is saying about Bitcoin. Bitcoin itself is a good investment. You always hear this, hey, if you had Bitcoin from 10 years ago, it's 100x'd based on what its current price is. But what people don't talk about, and many people point to, hey, Bitcoin's a store of value. It's the equivalent of digital gold. And I don't know why people don't just make this argument. One, Bitcoin has not performed well over the past 3 years. Look at its performance from 3 years. It's pretty bad. Let's take a traditional store of value, regular gold, and you'll see over the past 3 years, it's performed like what a store of value would do. If any precious metal, it's gone up. Now, I want to just put that out there. That's not really my argument, which I don't really care how an asset performs over the course of 3 years. I'm young. I'm more interested in the long haul, 10, 20 years. That's where I live. So let's move on past the actual store of value. Bitcoin is...
Okay, that already rubs me the wrong way. It's very strange that he cherry-picked a 3-year time period only to follow it up with a comment that he doesn't think a 3-year time period is a good time period, and that 10 years would be better. That's weird to me. So he said, I don't know why people don't just make this argument that over the last 3 years, gold outperformed Bitcoin. Yeah, that's very, very strange to me. So if you're interested in 10 years, then show a 10-year chart. I mean, okay. So that's one thing. Another thing is the idea of a store of value. So I think a lot of people throw this phrase around without ever defining it for themselves or for their audience. And so maybe he's going to mention it in a second, but the vast majority of people don't define it. And people tend to assume that a store of value means that an asset is worth more dollars in the future than it is worth today. And I think that's understandable. That's a convenient shorthand, but it's certainly not what I perceive a store of value to be. And I don't think that's really a healthy way for anyone to think about for themselves, because dollars are heavily manipulated, right? You can just print 1 trillion of them today if you wanted. I mean, not you personally, but the central bank or the government. So measuring value in terms of something that can be manipulated is already a bad decision. Secondly, value is subjective. Value is subjective. So like a glass of water, like we might value this differently. Like there was a time in my life when I was hiking and I ran out of water, and I don't know how many hours I hiked without water, but it's the thirstiest I've ever been in my life. And when I finally got to water, I probably would have paid $100 or more for water. I mean, we got free water, but it was the best tasting water in my life. and it came from a hose. But it was so unbelievably quenching, unbelievably satisfying, and I valued that water so highly. And there's no other time in my life where I would have paid $100 for a glass of water. Never. And so not only is value subjective up to each person, but it is dynamic, meaning it changes over time, which is, represented in the example I just gave. And it's also relative. So we don't value something absolutely, we value something relatively. So in that example I just gave, if I had $100 in my pocket and there was water in front of me, I would prefer to have the water instead of the dollars. So I prefer one over the other. And that's how we make value judgments. So if you want to talk about a store of value over time, it's inconvenient if you're going to apply those three things I just said, like the fact that value is subjective and dynamic and relative. Like it's very hard, but it's true. It's true. I mean, if I'm wrong about that, tell me in the comments. Tell me why value isn't one of those three things. Tell me why. Why value is either absolute or static or objective, like the same for everybody. I mean, if it's any of those three, tell me in the comments. So as we think about a store of value over long periods of time, it's a little bit inconvenient to encapsulate like those three properties, but I think if we're going to be responsible, we have to do that. And furthermore, we have to come up with a better way for representing value in our minds besides dollars. And I would say, for me personally, and what I recommend for other people, is to represent value in terms of energy. Energy. So if you want to store your value over time, what you're really storing is the energy you exerted to acquire the store of value. Whether it's dollars or gold or Bitcoin or whatever you think your store of value is, you exerted some amount of energy to acquire that thing. And storing your value over time means that you will be able to get at least that amount of energy out of that thing when you get rid of it in the future. That's it. So it's how much energy you store. So if you work all day, let's say you work all day long and you make whatever, $100, fine. If dollars are a store of value, then at some point in the future, you'll be able to spend that $100 to get something, whether it's food or entertainment or, a desk. I mean, who knows what you're buying, right? It doesn't matter. You'll be able to get something out of that money, out of those dollars, that would require you to spend more than a day of labor if you were to manufacture that product on your own. Hopefully that makes sense. So if let's say you spend 8 hours, you do something, you make $100, then you spend that $100 to get something that it took somebody else a week to make, or that it would have taken you a week to make. That's a store of value if you get more energy out than you put in. And, it seems like Bitcoin is certainly acting like a store of value in that way.
So let's move on past the actual store of value. Bitcoin itself is valuable. That's something I want to say. A lot of people think it's some magic internet money. No, there's a massive computing network behind Bitcoin. That's where it derives its value from. However, I would make the argument that value is not just going to 100x overnight. It's never going to go to $1 million. I don't know where people get this figure from, because there's a lot of shortcomings to Bitcoin, and I'm going to get into that. Many people think everyone in the world will use Bitcoin, and my argument is everyone in the world can't use Bitcoin. And I'll get into why in the cons section after this next point.
Okay, interesting. Everyone in the world can't use Bitcoin. I'm curious to hear his reasons for that. That's, I think, a new argument for me, depending what he molds it into. So we'll see what he says about that. He also said Bitcoin can't make it to $1 million a coin. Why not? I mean, like, hopefully he gives some reasons for why he thinks that. But I don't think there's any reason why it couldn't. I mean, it'll just take a while. That would be an implied market cap of approximately 21 trillion. There's really no reason why it couldn't be. I mean, that's okay, about double the size of gold right now. But if the Federal Reserve keeps printing dollars, then gold will also eventually be 21 trillion, right? If the price of gold doubles, I mean, that seems like not that hard to do. Again, it'll take a while. It's not going to be overnight, like he said. So we'll see. I mean, like these numbers do not seem like a stretch at all to me. So we'll see why he thinks that they are a stretch.
Number two, Bitcoin is a finite resource. What do I mean by finite resource? There's only 21 million that'll ever be made, right? Well, not exactly. It's actually less than that. Most people don't even talk about this aspect of it that would be good for those holding Bitcoin. It's deflationary. People lose keys all the time. I read an article the other day where I think about 8 million Bitcoin has been lost. That's a pretty big number considering there's only 21 million that will ever be made. Dang near half of the entire chain or the circulation right now is lost, meaning no one can ever access it, no one can ever move it. So that's a pretty big number. That probably will fluctuate up and down depending on who you ask, what you look at. But the fact is, it is deflationary, and it's a very, very finite resource, even more so than what people make it out to be. And I don't know if I like that or not, but let's just move on past that. I just want to say those are the two pros to it.
Okay, yeah, Bitcoin is a finite resource. Yes, there's only 21 million as a maximum upper limit. And yes, people do lose their private keys, and therefore they lose those coins. I don't know if it's as high as 8 million that have been lost. I've never heard a number quite that high, but even if it is, I don't know why that's a major factor. I mean, he's listing it as a pro. Like that's a good thing going in Bitcoin's favor, that it is like even more scarce, even more finite than people say. Maybe. I guess if the keys are gone, then yeah, it's more finite, but it doesn't really matter. It's not like 21 million was really that meaningful of a number to begin with. It's sort of arbitrary. Could have been 100 million or 1 million. It doesn't matter. And if a certain percentage of coins are lost, again, that doesn't really matter. Again, it doesn't matter. I mean, I guess like period. It doesn't really matter. It's, if we started with 21 and lost 8, okay, we're down to 13. What if we just created 13 in the first place and nobody lost any? And there's just 13. I mean, the number of the scarcity isn't really that important. I mean, it may affect certain people psychologically, but it's not really that important. And there's no reason why you couldn't, let's say there was only 1 million Bitcoin. Like we lost 20 million out of the 21 and we're down to 1 million. There's really no reason why we couldn't split up each Satoshi into smaller parts using second layer technologies, maybe even on the core layer. I don't know. And of course, that doesn't create more Bitcoins, but it makes the Bitcoins more divisible so that more people can use it and you can denominate smaller transactions. So it doesn't seem like a pro or a con. It's just like numbers. I mean, that's just how numbers work. So this seems almost like a backhanded compliment for Bitcoin. I don't know. It doesn't seem like a major point to me.
And we'll get into the actual cons now. Bitcoin itself is an outdated technology. It's 10 years old now, and the biggest shortcoming Bitcoin has is its transactions per second. Looking at this, you can see its transactions per second is abysmal at 7. And this has actually been improved over time. I've even seen it as high as I think about 12 transactions per second because it will fluctuate a little bit. And many people will point to it and say, hey, it can be upgraded, which is true. It has gone through upgrades over the years, and I'll go back in history to 2017. Now, anytime Bitcoin doesn't upgrade, per se, it's something called a blockchain improvement protocol. Or not protocol, but proposal. And these are BIP for short. Now, BIP 9 happened in 2017, and this basically said, hey, all these computers that make up the Bitcoin network, remember how valuable that is, right? All these people doing all these complex things, securing that network down. Those people basically got together and said, no, I know we're doing an upgrade and it's going to improve this bit, but we also want the block size to increase so we can jam more transactions on top of our already existing network. Why do I bring this up? Well, it's much like how our government works. No matter where you're at, you have to have this consensus. If you don't have a general agreement, then you have problems. And this is exactly what happened to Bitcoin in 2017. Miners basically held it hostage, and then a fork happened, a hard fork. And what that is when it splits. going back to our transactions per second, you'll see Bitcoin Cash on here. This is what happened. A lot of miners ended up splitting and making their own Bitcoin. Now, on its head, this isn't necessarily a bad thing, as Bitcoin has forked a ton in the past. There's so many Bitcoin forks, I could fill up a 20-minute segment talking about it. But I wanted to bring this up is that is not a good technology, not a good one to go forward. If you have this much disagreements and splintering of a whole community just over this, how is this the future? How is that a good model? That is terrible. And now there have been other improvements on that proposal. There's, I think BIP 8 was user activated forks, which meaning the holders of the currency could dictate when that actually happens. But there's a lot of things overall, though.
Okay, so here Chris is saying sort of three things. He's saying that Bitcoin is an outdated tech and that, something newer is going to surpass it. He's saying that Bitcoin has a very low number of transactions per second and something faster will replace it. And he's saying that the Bitcoin community has a lot of disagreement and forks and that type of thing, and that's not a good model for the future. Okay, so let's look at those one at a time. Okay, so first of all, Bitcoin is outdated. This is a common argument, a common criticism of Bitcoin, that it's basically a dinosaur, right? It was like the first one. It's old. It's a thing of the past now. But I think this misses a really important aspect of humanity and society, which is the network effect of protocols. So if you guys have seen my reaction video to Michael Saylor, you have seen him talk about protocols and how long they exist for. For example, English. The English language. Is the English language the most efficient in terms of words per second or your ability to communicate ideas quickly? No, of course not. We could find much faster ways to communicate ideas. But have we been speaking English largely unchanged for several hundred years? Yeah, we have. What about train tracks? Like the width of train tracks. Why are they that width? Because that was the width of Roman chariots. So is that the magic width that's going to allow us to transport the most cargo per second? No, of course not. Of course we could make them narrower or wider for different purposes. Of course we could. But it's the protocol we use, and change for the entire society as a whole is really, really hard. Really hard. It's easy for one or two people to change. It's easy to make railroad tracks a different width or to invent your own language like Esperanto. You can just invent things all the time. The hard thing is getting people to switch to it. It's extremely difficult. And I think a lot of people who criticize Bitcoin for being old and outdated and a new, better one will come along, I think they're missing the extremely powerful force of habit. That's number one. Number two is that transactions per second is like one property of 1,000 properties. And it's probably not the most important. And here's why. Because of second layer scaling solutions. So this could be the Lightning Network, wrapped Bitcoin, if you wrap it inside Ethereum or any other, smart contract, or anything else. I mean, there's no shortage of things that could be invented, that could be, improved. There could be 1,000 scaling solutions to Bitcoin that are in place at the same time. 1,000, easily. 1,000 different companies, 1,000 different blockchains, or tokens that are like Oracle tokens or smart contract. There's no shortage of ways to scale Bitcoin, and you don't have to do it through the Bitcoin protocol itself. You can do it through second layers. As it is right now, the majority of Bitcoin transactions do not happen on chain. They're off chain, and it's been that way for years. So if you buy and sell Bitcoin from an exchange like Coinbase or Kraken or Gemini or wherever you go, Binance, if you're buying and selling Bitcoin, those transactions are not happening on chain. They're not. It's just like Binance or Coinbase just crediting your account with the Bitcoins, or crediting your account with dollars or yen or euros or whatever you're using. They're not happening on the blockchain. It's only when you take your coins off of Coinbase or off of an exchange into cold storage that they actually send a transaction on chain, and then you get your coins with your own private keys. But the vast majority of transactions are not happening on chain, and they're not going to in the future. I mean, this trend will continue. So if you go to Starbucks or wherever to buy a cup of coffee, sure, eventually you'll be able to pay in Bitcoin, but it won't be a transaction happening on the blockchain. It'll just be whichever wallet provider you have, whether it's Coinbase or whatever, sending it to Starbucks's wallet provider, and it's just being credited, but the Bitcoins aren't actually moving on the blockchain. Maybe they'll settle their balance like once a month or something like that. So focusing on transactions per second is like completely missing the ball, like completely missing. Who cares? Transactions per second do not matter from a human perspective because we have second layer solutions, and the second layer solutions will address the human perspective. It's very simple. Like that's how it's going to happen. That's the same thing that happened with gold. That's just how society plays out. And the third thing he says here is that the developer community is fragmented and that they don't agree on things. Okay, this is literally what decentralization means. Decentralization means you don't have a centralized command. You don't have a centralized leader saying this is what we're going to do. So this isn't a criticism. This is a property of decentralization. This is one of the reasons that Bitcoin is decentralized. One of the reasons. So yeah, to criticize it and sort of say like this is not a good feature moving forward. This is literally what decentralization is. You're not going to have agreement all the time. You're not. So get used to it. I mean, that's life. And finally, one last thing I'll say here is that he poses a couple questions to the listener. He says, how is that the future? How is that a good model? And well, one thing I'll say, I'll just answer the question. I'll say like that's decentralization and it's good for certain things, whereas centralization is good for other things. So, okay, fine. But for those of you who want to get better at hearing people's arguments and analyzing them, which is what I'm trying to do here, one thing that's worth noting is that a question is not an argument. So if he says, how is that the future? How is that a good model? Questions aren't arguments. He's just asking questions. So just something to keep in mind that, you know, he's not really making a statement there. He's implying that it's not, that can't be the future. That can't be a good model. It must be something else because I find it hard to believe. I don't have the vision for it. Okay, I mean, it's not really an argument. He's just kind of saying it's almost like a tacit admission that I don't understand. So just something to keep in mind.
I want to just talk about this consensus algorithm with just proof of work. It's a terrible way to have a huge network. It's extremely energy wasting. It just wastes a ton of energy. There's no way around it. And it's not really doing that much compared to some other newer technologies. It's dated. They obviously need to change the entire algorithm for it to have any kind of future. And I just don't see this happening anytime soon. And just to say it's a store of value, as I've already said, it's not really.
Okay, so a little bit he's repeating himself here, saying that just it's dated, right? The proof of work algorithm is dated, just like Bitcoin as a whole is dated. You know, something old isn't necessarily bad. You know, I'm sitting in a chair speaking English. You know, people have been sitting in chairs speaking English for hundreds of years, right? It's not like chairs are outdated. Not like breathing oxygen is outdated, right? Like some things that we've been doing a long time, we're going to keep doing. So like just saying because it's old, it is therefore bad and will be replaced. That's a bad argument. That's a bad argument. I think you've got to say why something newer is better. Why is something newer better? And he sort of tries to answer that question just by saying, just kind of repeating his criticism, actually. So he says that proof of work doesn't really do anything compared to some of the newer technologies, right? Like using all this energy doesn't do anything compared to some of the newer technologies. I mean, they're doing different things, right? Like Bitcoin versus other coins. They're doing different things, you know, smart contracts or anonymity or whatever it is. So the reason that Bitcoin uses so much energy is to keep a very large amount of value secure. That's why it does that. And if people didn't like the deal that they were getting, they wouldn't participate in the Bitcoin network. I mean, that's the beauty of having a decentralized, open technology. It's like no one has to use it. You don't have to use Bitcoin. You don't have to be an owner. You don't have to be a miner. You don't have to be a merchant. You don't have to be anything. You can stop anytime. You can even bet against it. So you're free to do it. I mean, it's totally fine. And given this choice, right, you can have some other technology instead. You can own different cryptocurrencies, whatever. Given all of this choice, the collective choice made by every single person and company in the world is that so far Bitcoin's the best. So far Bitcoin is the best. I should point out, I should have mentioned this earlier, that this video was released in October, so five months ago. So just keep that in mind. But these criticisms, I think are weak criticisms. It's not like anything happened in the last 5 months that changes what he said or how I would react to him. So one other thing I'll mention here about proof of work is that Chris says they need to change the algorithm for Bitcoin to have any chance of succeeding in the future. Right? They need to change the algorithm. And this is sort of revealing because there is no Bitcoin company. I'm sure he knows this. There is no Bitcoin company. There is no central organization. So there really is no they. I mean, he's probably talking about like the Bitcoin developers who are volunteers. Of course, he's talking about the developers, but he is as much of a Bitcoin developer as I am, and as much of a Bitcoin developer as you are. And you might not even be a developer at all, but we're all Bitcoin developers. So we all collectively, all of us, need to change the algorithm, for ... fill in the blank, whatever you think needs to happen. So it's not pointing the fingers and saying like those other people need to fix this problem. If you perceive that there's a problem in a decentralized thing like Bitcoin, it's your job to fix it. It's your job to fix it. There is no like Bitcoin CEO. There is no executive board that's going to make these changes. It's you. If you think something could be better, make the change. Make the change. That is the beautiful thing about these technologies. And one thing to notice here is that everyone who has tried to improve Bitcoin by forking it and making their own coin, like Bitcoin Cash, BSV, Bitcoin Diamond, Bitcoin Gold, Litecoin, Zcash. I mean, all these different forks of Bitcoin who have tried to make it faster, more private, more whatever, fill in the blank, whatever you think can be improved. Every single one of them has created something less valuable than Bitcoin. Less valuable than Bitcoin. Every single one. Every single one. So all these people who think, oh, Bitcoin needs to be improved by ... every single one has failed. Every single one. Every single project that has said, you know what, I'm going to start from scratch. I'm not going to fork the existing code. I'm going to start from scratch and develop my own project. Every single one of them is worse. Every single one. They're all worse. They're all less valuable, says the market. Not me. This isn't like my opinion. The market says so. The market is pouring more value into Bitcoin, measured by dollars or whatever you want to measure it, more value into Bitcoin than into any other coin. Not just that, but more value into Bitcoin than into all other coins combined. All other coins combined. And people still make this argument that it's slow, it's too expensive, uses too much energy. I mean, these are such silly arguments. They're such silly arguments. Not only do we have evidence of how false they are right now in front of our eyes, but we have evidence of why these arguments don't hold up in parallel situations throughout history. So these are not very good arguments to me. I mean, yes, Bitcoin might fail. Bitcoin might fail, for sure. But so far, it's not because of anything that Titus is saying. Nothing. These are not good arguments at all. There are good arguments out there, but these are not good arguments.
That brings us into the next point. You remember me talking about those miners? Well, Bitcoin is really not that decentralized. We have 4 pools, which is 4 entities that if they got together in a back room somewhere, they could do some damage. If you get over 50% of the hashing power of Bitcoin, and you could do what's called a 51% attack. That is an issue, and it's not really that decentralized. So these are the main core foundational problems of Bitcoin. Pretty bad.
Okay, so a 51% attack is a concern, in my opinion. Like, it is a concern, but not really for the reason that he says. So just because a few of the mining pools collectively control more than 50% of the hashing rate, that doesn't necessarily mean that a 51% attack is going to happen, or that it's even appreciably more likely. Sure, it's probably a tiny bit more likely, but not appreciably more. And the reason for that is the incentives of the Bitcoin network. So sure, if you do a 51% attack, you can double spend some of the coins you have. Sure, no problem, which basically means you can extract value from other people, relatively quickly in a short period of time. However, then the network collapses and there goes your entire investment, right? Your investment in your mining rigs and your coding base and your infrastructure and your cooling and whatever else you have, right? Your expertise, obviously your hardware, your equipment, and so forth. So it would sort of, attacking the network would sort of, cannibalize your own investment. It doesn't really make sense for anyone to do that. Really, the only thing that makes sense for a 51% attack, at least, in modern times, would be a state actor, a country or a conglomerate of countries that collectively want Bitcoin to fail. But even then, it's unbelievably difficult. Not only would you have to co-opt the mining pools, but also the people in them. Because don't forget, it's not like all these mining pools are just controlled by one guy. I mean, it's like, there's all these users that can enter and leave the mining pools at will. They can plug and unplug their machines all the time. So even if the central hub of a mining pool was somehow controlled, maliciously, that isn't enough to execute the attack. Even doing that in 3 or 4 pools at once, as hard as that would be, that's not enough. You got to keep all the miners online, up and running. And how are you going to do that where there's all these people watching their machines and they know if they're going to process a faulty block, and they might unplug or they might leave the pool as some kind of cautionary measure until they can figure out what's going on with their machine. So I mean, it's, I think, way, way, way harder to execute a 51% attack than people realize. I mean, if you actually think about what would have to happen, it's way harder for it to happen. Yes, it is a security risk. Yes, it is a security risk. This is a risk inherent to Bitcoin. However, it's probably not as likely as people think. It's probably not just going to come from China because there's, 3 pools in China and they control more than half of it. It's very unlikely that happens. And also, this feature of these mining pools has nothing to do with decentralization. Nothing to do with decentralization. That's not what decentralization means, right? This is a concentration, right? It's not a centralization. It's a concentration of power. However, the power is the exact same for every single user on Bitcoin. So anyone can do anything on the Bitcoin network, including be a miner or not, be a full node operator or not, be a user or not, be a developer or not, and so forth. That's what it means to be decentralized, and we can all choose to do our own things and start and stop at any time. There is no central control. So just because there are a few miners that collectively have more than half the hash rate, that doesn't mean that Bitcoin's not decentralized. That's just not what it means. It's a security risk, yes, but it has nothing to do with decentralization or centralization. It has to do with concentration, a concentration of power.
Let's get over on the desktop and actually kind of showcase what's happening with Bitcoin and why you probably shouldn't ignore it. Because this is a problem that many people get into thinking, well, okay, I see all the foundational issues here. Well, I'm just not even going to, I'm going to ignore that and I'm just going to keep my dollars. Well, I got something for you. I wanted to pull up coin market cap because I'd say don't ignore this because there's $20 billion actually in Bitcoin right now. On top of that, a lot of this is moving around and is actually being utilized. $50 billion just in the past 24 hours is being moved and exchanged hands. This is a lot of money. So Bitcoin is being used right now, even with that abysmal 7 transactions per second that I mentioned earlier. And a lot of the actual supply of Bitcoin is being moved around. What the actual trading of Bitcoin looks like over the past year. As you see, it's done about sideways. It's traded sideways. It hasn't gone really up or down, so to speak. But I want to go ahead and give you a comparison chart as well. Here is what it's done with the S&P 500. This red line is what the S&P 500 did alongside Bitcoin. Very similar. Let's go ahead and add the NASDAQ in there. NASDAQ's actually performed higher than Bitcoin, but following the exact same patterns. So what is happening here? I believe you have billions of dollars of traditional money pouring into Bitcoin. Why? Because cryptocurrency will be the future. And I think a lot of these traditional investors realize this and think it's going to be Bitcoin.
Okay, so he says he has a lot of money in Bitcoin because a lot of money is coming into Bitcoin and a lot of money is being moved in Bitcoin. Sounds like those were his reasons. Okay. So does he also have money in other assets? I mean, not even cryptocurrencies, where a lot of traditional money is going into it and where money moves around every day? Like, that seems like a bad reason to buy something, right? Just because money moves into it and money moves back and forth within it. I mean, like a lot of stocks, like, because a lot of stocks go up and then you just buy those stocks and a lot of people trade the stocks all day long. So money's moving back and forth. Because that's your reason for owning something. So I don't think that's a very good reason. And then he shows, the price of Bitcoin over the last year, compares it to the S&P and the NASDAQ. I mean, okay, fine. If you want, if the 1 year performance is important to you, then it makes sense to look at a year, for sure. There's a lot of investment managers who have performance reviews at the end of a year and so forth, and that is a very relevant timeline for them. But Chris himself even said earlier that he thinks more of on a 10-year time scale, 10 years. Like, he didn't even like 3. He showed 3 and then he said, but I don't even like 3. I like 10 or 20. I think he said 10 or 20. So, okay, why aren't we looking at, Bitcoin and the S&P and the NASDAQ over the last 10 years? Right. So it just doesn't make sense. It doesn't make sense. Like, it's easy to just cherry pick any timeline that's convenient to you. But if you don't have a reason, a very specific reason for picking that time frame, then you're cherry picking. Like, you're choosing something to fit your narrative, disingenuously. So.
And I think that's phenomenal. I think that's great. But where they're wrong here is, well, I truly believe Ethereum and other projects will definitely be something to watch out for. You'll see Ethereum down here. Ethereum has something, a proposal, Ethereum 2.0 is what they're calling it. It's taking its transactions per second from the teens, I think, or teens to 20, what Ethereum does right now, up to about 100,000 transactions per second. And Ethereum's consensus algorithm also is changing to proof of stake from proof of work. Proof of work we've already talked about. That's obviously not the future. Proof of stake can be very, very good because it's not nearly as energy hungry. You just basically need a running computer, not a huge amount of processing power. And then what you need is actually a stake in the actual currency to actually be able to mine it, per se. And it secures the whole network using minimal energy while also doing sharding and other things to increase that transactions per second to 100,000, which is more than what we need as a world right now, which is amazing. That's more than what Visa does on transactions per second. So I'm always keeping an eye on Ethereum, and as you saw at the very beginning, I have about 40% of it in Ethereum. Other ones that are worth noting here is Cardano. That's another one that they're doing a lot of improvements on. I see the technical ability of that team being really good, but it's something that I'm always looking at different ones out there. I've done a presentation actually at a meetup about EOS. I'm not a big EOS fan, as I think it's a very bad cryptocurrency project for a whole variety of reasons that I won't get into this video. But it's very interesting to see all the different ones that are in existence, and it may not even be any of these. It may be something completely new that just comes in and fixes all the problems I talked about in this video.
Okay, yeah, I mean, I totally agree that there are other projects that are valuable, for sure. I mean, dozens and dozens of them, probably even hundreds of them. Yeah, I think Ethereum, Cardano are good projects. I mean, to the extent that I understand them. I think EOS might be a good project. I mean, I've owned all 3 of those coins, by the way, Ethereum, Cardano, and EOS. I've owned all 3 of them for over a year each. I think EOS 2 years, Ethereum probably 5 years, and I still have it. Yeah, so I mean, I've owned these coins. I think they're nice projects. However, they don't compete with Bitcoin. They don't compete. They're not in the same marketplace. So, I mean, saying that like, oh, these ones are faster than Bitcoin, therefore they're better. Oh my goodness. This is crazy. This is crazy. I mean, that's like saying, my gosh, that's like looking at Boeing and McDonald's, right? They're both stocks. They're both publicly traded stocks, just like these things here are cryptocurrencies. So they're in the same broad asset class. And then, Chris's argument here is approximately as good as saying, you look at Boeing and their cost of labor, they're paying, $50 an hour. $50 an hour. They've got all these engineers and whatever. And by the way, I'm making this number up, but $50 an hour. And McDonald's, their average cost of labor is $15 an hour because people, flipping burgers. Well, McDonald's is way more efficient, right? They're hiring people for less than a third of the cost, right? It's only 30% of the cost. They're clearly going to be better. It makes no sense. I mean, these companies aren't even in the same industry. McDonald's and Boeing. I mean, they're not the same. Just like Ethereum and Bitcoin, they're not even in the same ballpark. They're not doing the same thing. They don't compete with each other. And comparing them makes no sense. Comparing their price performance makes no sense. Comparing their transaction speed, it makes no sense. No sense whatsoever. Bitcoin is designed to be money, and money is a store of value. In other words, a store of your energy. That's what Bitcoin is designed to do. In order to do that, it sacrifices a lot of things because everything we do is a trade-off. It's a whole collection of trade-offs, actually. And so Bitcoin doesn't try to be fast. It doesn't try to be private. It doesn't try to be smart and have smart contracts. It just tries to be solid and decentralized at every aspect of its technology, everywhere. So if you want to surpass Bitcoin, if you want to make a better Bitcoin, you have to make a better money. Not a better privacy token, not a better smart contract, not a better cross-border payments system, not a better whatever, not a faster thing. Bitcoin wasn't trying to be fast. When Bitcoin was designed, it was slower than the existing financial system. It was slower than the dollar. So it's not about speed. It's not about speed. So if you want to make a better Bitcoin, you got to make a better money, not a better currency.
I wanted to show all this just to say, hey, Bitcoin is probably going to fail. That's just what it looks like to me, analyzing these different points of view. It's the most logical conclusion. That's not to say cryptocurrency is bad, though. Cryptocurrency, one project out there is going to solve all these problems. And when that happens, there's a lot of great things that come from every cryptocurrency. Bitcoin, as we saw, billions of dollars are in Bitcoin right now because it solves a ton of problems. When you go to transacting or sending money overseas, all kinds of different scenarios, Bitcoin is a way better solution than a traditional bank. I'm really interested to see where this market goes. But as always, you need to watch out for what's going on out there. There's tons of scams in crypto, and that's why people hate crypto. I just am tired of hearing this hype train of Bitcoin's going to be $1 million. No, it's not. It's going to be worthless in 5 years. But in the interim, I can use my Bitcoin to transact with many other upcoming projects that might be the future. That's why I have about 20% in there, because there's a lot of things that I can do. And as Ethereum comes and evolves, I'm curious to see what happens to it. But that's not a surefire thing. If Ethereum does 2.0 right, has 100,000 transactions per second, does the move to proof of stake, removes the dependency on the consensus algorithm that makes things so energy hungry, it could be that currency of the future. Will that happen perfect? No. If anybody that's done a computer migration or done any kind of complex computer migration knows, it's never a straight line. There's going to be bumps in the road. I'm curious to see what happens with Ethereum, but more so, I'm curious what happens with all these other projects as well, because as we know, crypto today is not how crypto will be 5 years from now. To say Bitcoin's going to be the winner out of all this, I think is extremely short-sighted. Just because it's the first, it hasn't really seen that many improvements over the years, I think is extremely dangerous, because a lot of mom and pops will hear about Bitcoin and end up dumping a bunch of money into it. That's just not good. So here's my counterpoint, just to balance things out and help maybe save a person or two from dumping their life savings into Bitcoin. Because don't do that. Bitcoin is good for doing some things today. If you're doing mini exchanges and investigating certain projects and trying different things out, by all means, use Bitcoin. But if you're not actively using it and you think you just can throw money in there and just let it sit for 5 years and it'll just magically turn into $1 million, that's not going to happen.
Okay, wow. Little surprised at that take there. Okay, Bitcoin will be worthless in 5 years. Interesting opinion. Again, that's an opinion. I don't think there's really an argument there. Like it will be worthless in 5 years because this, because that, whatever. Because it's old. I mean, and that doesn't make sense. No, I doubt it. I doubt that's his argument. Bitcoin is probably going to fail. It's the most logical conclusion. I mean, I'm kind of shocked here because, first of all, we haven't been using logic this whole time. No need to start now, right? You haven't been using logic for 15 minutes. No, I'm kidding a little bit, but I actually don't think Bitcoin going to zero in 5 years is a very logical conclusion. It's possible. Of course, it is possible. It's possible. It's possible. I will say that 1,000 times. Bitcoin could fail. It could go to zero. Of course it can. That's a risk. 51% attack, it is a risk. I don't even think a 51% attack would send the price to zero, by the way, but that's just an opinion. I can support that in a separate video. But I don't think he's making a strong case here for why Bitcoin will fail or why it won't even continue to be number one. I don't think he's even making the case at all. I mean, not even close. So these points are very easily refuted because they're either a misunderstanding or misguided or self-contradictory. When he says chooses a time period and a performance and measured against the dollar and store of value. I mean, he's not defining those things. He's not being consistent with his own viewpoints. I just don't think those are very solid points at all. He also says that one project out there is going to solve all these problems. And no, it's not. No way it's not. There's probably going to be one leader for money because of the psychological phenomenon in a society that people tend to choose the one best money. They tend to choose the one best money. I think it's Bitcoin, but I'm hedging that with gold and silver in case I'm wrong. So I'm hedging my own conviction with the second best money and the third best money. Over time, people will store their value in what they think is the best money. For most people, I mean, if you go before Bitcoin, before 2008, so 2007, 2006, etc. Most people held, almost 100% of their value in their government's fiat currency. Most people would just hold all their value in their government's currency because they didn't even realize there was more than one money to choose from. This is part of the problem in society. People don't realize you have a choice of what money you use. So in other words, where you store your value, how you save. But with the 2008 financial crisis and the advent of Bitcoin, people are starting to question that more and more. And they're saying, oh, I can just choose where I store my value. And a lot of people are choosing Bitcoin. So, okay, Bitcoin might not be the number one thing. However, when it comes to money and a store of value, people tend to choose the thing that other people are choosing. It has very, very, very strong network effects. Very, very strong network effects. It's like how different people within a society and different people across different societies have all gravitated towards gold over thousands of years. Doesn't matter what they started with, whether it was seashells or beads or sticks, or it doesn't matter what it was, feathers, they all tended to go towards gold over time because it was the best. It was just the best thing. And if Bitcoin is the best thing, great, it'll be Bitcoin. But if it's something else, it'll be that something else. But what I don't think is going to be the case is that we have multiple amazing monies. We're going to have basically one best one for money. But the money is not going to solve the privacy issue, the speed issue, all these other issues that he talks about. There's not going to be one project that solves all those problems. There's going to be one project that is basically money. Then those other problems will be solved by a whole bunch of projects. There will be tons of smart contract platforms. There will be tons of anonymous tokens. There'll be tons of all these different things. There'll be tons of them because those markets don't actually benefit from network effects. They actually benefit from competition. They benefit from competition. It's the opposite. So if one platform becomes too expensive, let's say your favorite privacy coin becomes way too expensive for you to buy and send, if your goal is just send something privately, you'll buy the cheaper coin and send it. And then you'll be done. You won't hold the privacy coin. You'll hold it for whatever, 5 minutes, however long it takes you to do the transaction. But there's no reason for you to go to the more expensive one. Same thing with smart contracts. If it's way too expensive for you to get onto a smart contract platform and then execute your smart contracts because, you know, the gas or whatever kind of transaction fees are too high or the energy is too costly, you'll use the cheaper platform. And that will, you know, sort of like increase the market share, increase the usage on a secondary platform. So there will be many winners in smart contracts, many winners in all these other spaces, but probably only one winner in money. And that's a prediction I would have made before cryptocurrencies even existed, because that's just what we see in different industries throughout human history across the world. Doesn't matter the language you speak or your race or your religion, that tends to be what happens. Money tends to be a monopolistic industry, and just about everything else tends to be competitive. So guys, that's basically all I have for today. If you can't tell, I am obsessed. I am obsessed with coming up with strong arguments and identifying weak ones, weak arguments in myself and weak arguments in other people. And it's not my goal to attack others, just to attack ideas. That's my goal. So I'm not trying to make people feel bad or put them down. I'm trying to identify ideas that are very strong and ideas that are very weak and separate the two. And in the spirit of that, I invite you guys to tell me in the comments if any of my ideas are weak. If I have weak ideas, I want to hear from you why they're weak. So you can even quote me and you give me a timestamp and say, this, what you said here, this is weak because of this reason or because of this other thing. And if you want, you guys can send me links to articles, videos, anything like that. I'm happy to read and watch and learn. And, you know, if I'm wrong, I'll admit it. And I'd much rather find out about it from you guys than from learning the hard way by, you know, losing everything. So thank you guys. I appreciate it. And I'll see you in the next video.